to Go 1 to 100
Podcast.
Top Gun? Podcast.
Yeah, totally not an audio.
Okay, right. Okay, right. Welcome to the Go 1 to 100 podcast. Top Gun.
Now it's confusing.
Okay, so yeah. Welcome back. I heard that before I continue with what I want to say today, let me introduce us again. Yiqian here. This is Xiaoqing to my right. And then on the far end of the table, we have Daniel. And very interesting news today, the Fed decided to hike the interest rate again.
Oh.
Yeah.
Again.
I think
How many basis points?
75 basis points.
Oh, 75.
I think so. Yeah. Even the Swiss banks have hiked their interest rates also from zero. Well, this goes to show that the market is moving. And I think we might possibly be moving into recession slowly but surely.
Sounds exciting.
Sounds exciting.
Yeah.
To us, it sounds really exciting. So if you actually tuned in to our previous episode where we briefly touched on recession and how you can recession-proof yourself, we decided that today we'll probably extrapolate and talk a little bit more about recession and how you can really grab the bull by the horns. No, wait, we should grab the bear by the fur. So,
if you grab the bear by the fur, that's it. It's going to be a very angry bear.
I have my subject matter experts, and we'll probably talk about recession and the 3 P's that we can talk about. Yeah, one of the P's that we would like to touch on today is this thing called
Power up your savings.
Power up your savings. But before powering up our savings, before moving towards that, our head on investment actually talked about differentiating between market growth and investor growth. I think this is very interesting, and I think it's a very new, fresh perspective for self-investors out there that you guys might be interested in. Yeah. So who would like to go first?
Well, market growth versus investor growth. I guess market growth is how, after you invested, the market has grown and then it helped you to grow your money. I mean, essentially is that, right? So invested in the bottom of STI at 1,456. That was 9th of March 2009. I see. Can read off the numbers, right? I still remember. And then the market grows by 20-30%. Yeah, so your market growth is about 30%. But investor growth is another thing altogether, which I will leave to Xiaoqing to share.
So market growth is something that we can't control. It all depends on the speed of recovery of the entire economy. Investor growth, on the other hand, is purely in our hands. So you can decide whether you want to make use of that market growth or you want to take control of that growth and grow your assets much more bigger than that. So during the last crisis, what I heard from my head of investment research is that although the market moved only 12% from peak to peak during the last crisis, his asset actually grew 300%.
Wow, 300%.
Exciting, isn't it? I was excited, and I was too bad back then I wasn't in unicorn yet. But he was generous enough to share how he managed to do that, and on a step by step, which I was really excited. And when he shared with me the sincerity that he has in his eyes in telling me that I have done it in the past, and Xiaoqing, I don't want you to miss this opportunity, and that's the reason why I want to share it with you. So that sincerity inside his eyes kind of inspired me to quickly share that with everyone, and that's why we are doing it in this podcast, because this opportunity doesn't come often. Bull run comes about in
last one
market
was
cycle was like 13 years ago.
13 years ago,
15 years ago.
13 to 15, yeah.
We came out after 13 years, so it was 15 years ago because it lasted for about 2 years.
Yeah, so the window period that the bear market is probably just another short window period of 2 years.
We don't have a crystal ball, we can't tell, but just move fast and act fast and just do it decisively.
Yeah.
Right, so that was based on historical data that the bull run usually comes only in like 12 years and is only a short period of 2 years. And since the beginning of this year until now, we have already lost 9 months. Oh my God.
Has it been 9 months already?
9 months already, yeah. Can give birth already.
Oh dear. I better make my move soon.
Yeah.
你要陪我嘞 Daniel.
哈？
对
什么？
Yeah, later I discuss with you, but never mind, that's another story.
What's going on?
Yeah.
Anyway,
Okay.
the last market peak was in 2007. So I don't know whether I mentioned in the last podcast that I joined in 2007. Yeah, so '07 was the peak, and then the subprime crisis came. That was in 2008. The bottom of the market, like I mentioned, is 9th of March 2009. That's for STI index. And generally, the markets across the board also about March 2009. So from '07 to '09, it came down. That was 2 years. For the market rally, it was 2009 all the way to 2013 to 14 before the next correction came.
That's 4 to 5 years.
4 to 5 years.
4 to 5, yeah. Of course, it rallied even further. The US market rallied even further and further, yeah. But yeah, the window for a bear market isn't very, very long. It's probably like what Xiaoqing mentioned, about 2 to 3 years. So the window of opportunity actually is here.
Yes,
Yeah.
and that's why we are extremely excited.
Yeah.
Yep. So just now, so with all this explanation with regards to market growth versus investor growth, so it's very important for you to plan for success, because if you fail to plan, you plan to fail. So right now, like Daniel mentioned, we've already lost 9 months. So it's better that you sit down and think about what you want to do next. So Xiaoqing also talked about this this term power up savings. Maybe you can elaborate about a bit more on that. How do you power up your savings at this point? Everyone's like tightening their wallets, and then it doesn't feel 好像钱不够用, like not enough money. How is it that you can power up your savings?
Yeah, very good question. In fact, some of my clients was asking me, yes, I know how painful inflation is, but the fact is when inflation is here, I need to spend more money. How can I save during inflation? Yes, I don't know the importance that inflation is here. I need to invest, but the fact is I don't even have more money to be investing at this point in time. So exactly because of this reason, we need to power up your savings. And how do we go about doing it? That there are different ways and means. One of which is, although it sounds very traditional, but it's a method that
Try and test it. Wait, power up saving, does it take a lot more effort on my part?
oh, not at all. You'll be surprised that it could start as low as $100 a month.
Right. So I don't have to really carve up
Scrimp
like a
and
lot
save,
of money.
don't need
You don't have to cut your vacation. You don't have to cut your shopping.
Wow.
It's just wow.
So easy.
Yeah,
Wow.
it's that easy.
Come,
But
come,
it's
share
really
with
just
us.
to sit, really bite down the bullet and to do it.
Yeah. Yeah, it's getting started that's more important. And I guess $100 a month, everybody can afford that.
Yeah.
It just means going for one less meal of a cafe or the restaurant that could easily cost $100. That could easily cost $100 a meal already.
It does
So
nowadays.
can you imagine 以前 if the market is to go down 50% from
Yeah.
the peak, and then you were to invest that $100 there, just because of the market growth, the market recovery, your $100 will actually double to become $200. So it's that simple.
Can eat twice at the restaurant.
Yeah, man.
Yeah, can eat twice. Can.
No effort at all. Yeah, just
Cool.
basically leveraging on the market growth. Yeah,
Okay,
But first, the
that's-
investor growth must be there.
correct. So by putting aside that $100, that is your investor growth.
I see.
Yeah,
That's
growing
the
your
call
asset
to
like that.
action.
Yes.
So I guess the best way is to have a look at my own inflow and outflows.
Yeah.
Cut away the what you call discretionary expenses.
Right.
The Grab food lah, my acai bowl lah. Yeah, yesterday I bought acai bowl for my director.
Oh.
The acai bowl lah, yeah, the Grab food, and all these things that are the frills. If I cut all these, yeah, maybe to come up with another $200 is quite easy.
Yeah.
Should be.
Yeah.
It doesn't sound that painful.
Yeah.
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 Cool.
And I guess that $100, if invested during the recession, I think you'll be surprised what it means if you don't start these $100 today.
I think for a lot of people, they probably can't tell. We are very excited about it because we've been, we this is what we do.
Yeah.
Yeah. So,
And you know what? Just this afternoon, our somebody in the company actually screenshot and sent us that.
Yes.
He's doing his investment with his wife at 11,000 a month.
Exactly, 11,000 a month. That's so
Fantastic.
inspiring.
Yeah.
Yeah. And at this point, I mean, he's spearheading the entire campaign. Yeah, it's like our rallying call, like "Chiong ah," everybody has to do it together.
Yeah.
Yeah.
I mean, you don't have to do an 11K. You can do with 100, like Xiaoqing say, and at least it's still something to get you started.
Absolutely.
Yeah.
Yeah. probably I add on one more point. It's all about choices, right? The choices that we make on a daily basis. So I was quite hungry just now.
Is it literally hungry or
Yeah, literally hungry.
Hungry for
And I had a
something.
choice of having the doriyaki thing that I got from this Japanese
Bakery.
patisserie. Yeah. So there's cream inside. There's red bean. It's
Oh,
full
so
of
good.
sugar, lah. Yeah. Then I was thinking of, that.
Dinner.
That and black coffee. Wow, that'd be so good before the podcast, right? But if I make the choice, then my plans to have weight loss will be derailed again. So instead, I had a bowl of blueberries.
Wow.
That's a very big difference.
Correct. So actually, it's all about choices that we make on a daily basis.
You know what? You know why you probably would succeed more than I do?
Why?
Because I would have half the doriyaki. That would be how I would do it. I would have half the doriyaki.
I
Yeah.
think I will do better than you.
just want
you have
it.
nothing.
Just now my sister texted me, it's like, oh, I'm going to that famous traditional cake store with that fluffy cake. Do you want me to get some for you? I was like, I really want that, but I know that if I'm going to eat that, I'm going to get fat, so I'm going to say a no to that.
Solid.
Wow, this is 坚持到底.
Yeah.
Okay, so now I thought about something about the power up savings. So we are encouraging people to take action and then to put in their funds to invest. I thought about something you shared with a client today with regards to the small dog and the big dog.
Oh,
And I thought it would be
okay.
very helpful to highlight to our listeners how, despite this is a rallying call to like a call to action, but also to be prudent in the type of investments you are going to be
The
putting
kind
your
of
funds
instruments
into.
that you're investing into. Yeah.
That's right. I thought that would be
Okay,
a
yeah.
very
So I was
cute,
sharing with the client that dollar cost averaging is a great strategy, right? But then you got to choose your instrument right. So, for example, you have a small size, a baby puppy, the Chihuahua. The breed is a Chihuahua, and you have a baby who is a golden retriever. You continue to feed them dog food over a period of time, right? Which one will get bigger?
Which one will get bigger? I think the golden retriever.
Correct, lah. The Chihuahua, because of the breed, you'll continue to stay about the same size.
We are not against any dog breeds. It's just a metaphor.
Yes. But then the golden retriever will grow tremendously. So same thing in this current season. If we choose the wrong instrument to be investing into, then it may not grow, just like the baby Chihuahua.
Yeah.
Yeah.
Yeah. So, like I said before, if you fail to plan, you plan to fail. And so the third P would be professional partnership. I think it would be quite helpful to speak to someone on your financial journey. Yeah. Like the previous episode, we also mentioned that it's always, you don't have to
Let's keep that for another episode.
Oh, sorry. Let's keep that for another episode. Literally, you don't have to walk alone. Cue Liverpool song. Okay, this is a tribute to Henry. If you're listening in, we miss ya. Okay, so we'll leave that to another episode.
Okay, just one last note before we end.
Yeah.
Yeah,
What
just
would
now
that be?
Isia was saying that if you fail to plan, you plan to fail. If you fail to manage your finances, you will let the lack of finances manage you.
Wow.
So choose
Oh.
wisely.
Wow.
Okay, no wonder now I feel very managed.
Oh,
Yeah.
What's the greatest force on earth?
gravity,
Gravity, correct? What if you take it away?
then we can all float and fly to the moon.
Wrong. You'll get gravy.
What if you think-
Gravity. You take IT away, eat away, you get gravy.
So are we going for curry gravy now for dinner?
So wealth accumulation is one of the most important thing. If you take it away, then that's it.
You then become gravy.
Ah.
Einstein once said the eighth wonder of the world is the power of compounding.
Right.
Right. Okay, leaving you with this gem over here, and then we'll take our leave for this week. Thank you for joining us. And remember to like, subscribe, and click the notification button.
Share.
And share as well. Thank you, everybody.
Thank
we'll see you next week. Bye.
Bye.